Hi, this is Linda Eedes. This is an update on the RECM Global Fund, looking specifically at the second quarter of 2017 and how we position currently. So the fund had another strong quarter. It was up 3.9% in US dollars, and that's against a backdrop of a very buoyant global equity market. The fund is now up more than 33% since the beginning of 2016, and I think if you consider that during that time we've probably had about an average of 25% of the portfolio in cash, that's a really impressive return. I think what it demonstrates is that value opportunities, when that dislocation becomes very extreme, can be unlocked even in the face of a market that seemingly is continuing in the same direction. So if you look at sort of the global backdrop, you've really just seen a continuation of that bull market. It's narrowed even further into a small group of technology stocks. But even with that context, the value opportunities in the global fund have started to come through. And I think what's very exciting about this portfolio is that it's quite a young portfolio. If you compare the portfolio today versus how the fund was positioned 2 years ago, there are over 20 new investments in the portfolio. So those are 20 new value opportunities that we found as that market has widened. We had quite a concentrated portfolio 2 years ago, and that is no longer the case. And we are really poised to benefit from that continuation and that swing from value, sort of from growth rather back into value, and that value investment style coming to the fore. So looking at the global backdrop, the parts of the market that performed very well during the second quarter were largely the sort of more growth-oriented type businesses. So it was a little bit of a swing back towards growth, back towards the big technology companies. The good news is that we participated in the form of Mail.ru, which is of course the Russian internet business which we hold. That did incredibly well during the quarter. And there was also quite a swing towards emerging markets. So we saw that in the first quarter of this year as well, but emerging markets were the star performers across the globe. And we've got a lot of businesses which have either direct exposure to emerging markets or indirect exposure to emerging markets in terms of their underlying clients or customer base. And all of those stocks performed very well with that backdrop. So there I'm talking about businesses such as luxury goods retailer Coach, Greco, Standard Chartered, which obviously has a lot of clients in the emerging markets in particular, and all those businesses which really have sort of either are domiciled in emerging markets or participate in that sort of swing in sentiment back towards that area of the market. The US dollar also weakened during the quarter. That was despite the fact that the Fed raised rates by 25 basis points, and that was also positive for the portfolio because a lot of our stocks are domiciled in other currencies, and even within the cash portion we actually allocate quite a bit of that cash is actually held in pounds, is also held in euros and in yen, and we still feel that both in fact, all three of those currencies are still quite undervalued in purchasing power parity terms relative to the dollar. So that was also beneficial for the portfolio. Now turning to the composition of the portfolio, if you look at the top 10, it's quite a mixed bag of global value opportunities. You can see there's quite a bit of diversification here, with UK and Portuguese retailers, Tesco and Sonar still in the top equity holdings. We've got some great high-quality industrial engineering type businesses such as Greco, Alfa Laval, Rolls-Royce. We've got the UK and Australian government services contractor Serco, Japanese energy and natural gas producer Inpex, and then as I mentioned previously, the emerging market focused bank Standard Chartered, and Buffett's Berkshire Hathaway, and that gives you a very broad exposure to cheap but quality businesses in the US in particular. And then, of course, Implats, platinum producer, that's the one part of the resources sector which probably still offers compelling value. And then, of course, luxury handbag and shoe retailer Coach, which is in the midst of quite a turnaround and also participated in that sort of rally in emerging focused businesses. New stocks which we introduced during the quarter included Sports Direct, which is, of course, the largest sporting goods retailer in the UK. It included insurance companies Porto Seguro SA, which is a Brazilian insurer focused largely on car insurance, and then Unica, which is an insurance group in Austria. Sports Direct has seen its business and share price come under quite a bit of pressure over the past 2 years. That's largely as a result of the weaker pound. A lot of its products are imported, and of course the weaker pound has impacted the gross margins quite significantly there. As I mentioned, we do believe that the pound is significantly undervalued, so that should turn around in time. But also there's some very company-specific issues with Sports Direct, some negative publicity that they've received recently, and a lot of general negative sentiment towards UK retailers in the face of Brexit and the sort of uncertainty as to how that will play out and the impact it will have on those businesses. So we're assuming a re-rating on the back of a recovery in the underlying margins, particularly in the sports retail division, and we expect positive sales growth as well. They've got a very deliberate store investment and expansion program, and if you take all of that into consideration, the current share price does represent a very compelling opportunity to buy that stock at a significant discount. Porto Segura is the third largest insurance company in Brazil. As I mentioned, it's focused primarily on car insurance, and it's got the largest market share in that portion of the market at 30%. Here we're looking really at the business cycle for this segment of the market, which is very closely linked to vehicle sales. So if you look at vehicle sales, they've recently hit decade lows in Brazil. That's resulted in the business trading at very low levels, quite close to book value, when normally they're sort of trading more sort of between 1.5 and 2 times book value. So we expect that to normalize as the cycle plays out. Unica is the second largest insurance company in Austria. The business is undervalued largely as a result of the low interest rates we've seen in Europe. That's placed a lot of pressure on the capital earnings and growth prospects for this business and other insurance companies as well. But something that differentiates Unica is that it's sitting on a dividend yield of 6.7%. And that's, we believe, sustainable going forward. So although we don't know what the timing is going to be of the interest rate cycle, we know that it will turn, and you're being paid to wait for those conditions to come through. Cash is slightly up this quarter at 25%. That's a result of some of that selling down, the stocks that have rallied very hard this year. And that is still useful. We definitely want to keep some dry powder for the opportunities that pop up. We are seeing, sort of pockets of opportunity open up, and we want to obviously have cash at the ready to deploy those when they become available. So to conclude, the RECM Global Fund is a nicely diversified portfolio. It's a nice young value portfolio, and you really sort of have the tailwind of the value cycle turning in your favor. We're really sort of in very early stages. In fact, that value cycle has almost come back to where it was at the beginning of the year, and so in some ways you have another bite at the cherry. In the meanwhile, our global portfolios perform very well. So whilst the value cycle has turned back a little bit, the portfolio has actually continued to do very well. So I think this is a great portfolio. We're very comfortable with how it's positioned, especially in the context of a lot of risks out there, and it's poised to do good things for investors going forwards.